you can go back to the Asian crisis of '97 or the GFC period, where China, obviously determined that currency stability was a policy that was going to suit its own purposes best, and probably for the rest of the world. And I think they deserve a lot of credit for that. So we have certainly seen from the latest reserve numbers that we had for March, for example, that clearly they've been using this so-called counter-cyclical factor to offset what has clearly been some outflow pressures that have obviously been manifest in other parts of the emerging markets in Asia, but much more strongly than that. So so I think that providing this anchor in terms of currency stability is certainly a policy that suits them, and obviously in the face of the various policy easing measures that we've seen again today, obviously confirming that cut in the loan prime lending rate, other things equal, you expect that would be leading to some increase in capital outflow pressures. But if that is occurring, clearly the PBOC is deciding that resisting those is the best policy, and we think that will continue to be the case going forward.
Okay, Ray, you make an interesting point. You're talking about how the USD, the dollar demand, is not falling away sharply. Explain that, given all that we've seen the Fed do in regards to stabilizing the dollar funding market. Do you still see a shortage in dollar supply, and what would that mean for the long-term trend, or actually even the foreseeable trend on the USD, the trade-weighted dollar index?
Mm-hmm. Well, I think it's the right question to be asking still, because although we've seen, there's no denying the significance of the two big actions that the Fed has taken to alleviate some of these so-called dollar funding pressures, particularly the reactivation of dollar swap lines with other central banks that gives, banks within those other countries the opportunity to borrow dollars from their own central bank, and then more recently this so-called FEMA program, which effectively allows central banks that do have dollar reserves in the form of U.S. Treasuries to effectively repo them with the Fed. So that's an additional source of dollar funding. But this isn't the funding that's available to everyone. So if I'm an emerging market corporate, for example, or if I'm a hedge fund, for example, that's been funding through the dollar funding markets, this doesn't immediately open an access to me. So if you think about a lot of companies or even sovereigns that are borrowing in U.S. dollars and then swapping those dollars back to local currency, a lot of that takes place, in the sort of longer term markets. I think of something like the 5-year cross-currency swap market, for example, and we haven't seen those funding rates coming down nearly as much as we have in terms of the short term. So there are still significant pockets of stress there. There's an enormous amount of emerging market debt rollovers that need to take place this year. I think the Institute of International Finance is suggesting $730 billion worth of foreign currency debt. And it's not at the moment abundantly clear that those dollars will be as readily forthcoming when they come to roll over that. So that is something that continues to be a source of dollar strength. But if we sort of look beyond that, I still think that in the bigger picture, the rate at which the Fed has been effectively printing money or pumping up its balance sheet relative to other central banks around the world and the amount of policy space they probably have to continue doing that, ultimately we think that is going to be a big dollar depreciation factor, but it's clearly not going to be one-way traffic. So I think that, as we're seeing today, the day-to-day correlation between risk sentiment and the dollar is not, is not everything, is it? So the dollar certainly has been lagging, or the dollar's fall has certainly lagged the improvement in broader risk asset sentiment that we've seen in the last couple of weeks.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.